We really want to be a pure Euro investment grade manager. So the bulk, let's say 90%, 95% of our investments will always be in that space. The type of off-benchmark positions we can use really depends on the market environment, which opportunities you like to chase. When the high yield market is still quite wide, you could look for rising star candidates because then the spread upside is quite significant. But given how compressed markets are currently, that's not really an area where we dive into too much currently, because the additional upside of investing in double Bs is not really there compared to where IG spreads are. What you could do, for example, if you have non-rated companies, those bonds are typically less liquid, so you get an additional premium. We're more than willing to accept, let's say, the lower liquidity and in return get more spread. We jokingly always say 24 hours because then the investment case has played out, but in practice, no. So we're very relative value focused and we always try to put the money to work where we think the risk returns are most attractive, which could mean that some bonds we hold for 1 day, 1 week, 1 month, but there are also bonds we hold for maybe several years, as long as the risk return profile of that specific bond fits our view. Typically, the turnover of the portfolio is between 150% and 200%. Currently, we're seeing a lot of risks on the geopolitical front as well in the portfolio, and we've designed a tagging tool to monitor those risks. For example, we have a tag called a trade war, which is of course very relevant at the moment, and then we tag every company in our portfolio that we believe is exposed. In that way, we can always see if we're still comfortable with the exposure we have.